Hello, everybody. Welcome to my new Sunday market breakdown. We start as usually with the DXY. So you can see I have here a lot of pairs in my daily pattern section where I want to look for a pattern on the 4 hour and on the daily. So yeah, this week will be a more active week because there are a lot of pairs that will play out, I guess. I will need to find out if that will be or not. So yeah, what I see on the DXY, we are at the weekly chart, and what you can see is we had that bigger bearish W from the weekly. So we have that first leg, second leg, the third leg, possible fourth leg coming back till that IC. Between all the red candles, you have one blue candle. This is very powerful. So I expect maybe a push till that a weekly zone, and then we can go to the downside. So what I can already also see is we have here a kind of diesel box from the weekly. We have already a third uh, candle that is rejection from that zone after that weekly bullish candle close. But we have that weekly bearish candle close. So this can be an indication that the price is already ready to go to the downside. So that's why I went to the daily chart. And on the daily chart, you can see that we had that first leg, second leg, third leg, the fourth leg already forming for that potential fifth leg till the daily minus 27 here, the round number. So this was the bigger bearish W. Within that, we have a smaller one. We have that smaller one, the first leg, second leg, third leg, fourth leg. So I drew my Fibonacci from the high here till the low, and between the 61.80 and 78.60, that smaller bearish W is within that. So that's why I drew this daily zone at the daily highs here from that smaller bearish W. So that's why I'm looking at here some pattern, or if we break that, then it will be the daily highs here, and then we can reverse on the DXY. Or maybe if that isn't possible, then we will go to the weekly institutional cal, and from there we will have some bearish orders to kick in from. So that's what I can see for the moment on DXY. So the first trade I have in mind this week is NZDUSD. If I go on the weekly chart, what we can see is we have here that very big bearish W from that weekly chart, very big impulses, and we rejected from that weekly lower high here. Very big sellers kicked in from that point, and now we also had that sellers kicking in very nicely with that weekly bearish candle close here that will close bearish. So it's an indication. So then I went to the daily, and on the daily, what you can see already is on the daily we can make here that shoulder one, this head, shoulder two, we broke this higher low with a break. So that's why we can go to the downside for that reversal pattern. So you can also see that we have a supply and demand zone in that shoulder one zone. So we have that shoulder one as resistance, this as the head we have support, and now we can act like resistance here also. So it's a nice supply and demand zone, very nice pattern to see for maybe a nice short. So in that daily zone, I'm looking to take a trade. So the 4 hour needs to have some more development. Then we can go to this daily zone, and then I want to see deceleration or a pattern, bearish W, or and then shoulders like this for possible more downside momentum. That's what I can see right now. So the next trade is USDCHF. So on the weekly, what you can see on the weekly chart, we made multiple weekly bearish candle closes. We are bearish on the weekly. We made here that bearish W on the weekly, first leg, second leg, third leg, fourth leg, possible fifth leg, but we had a weekly bearish candle close. So I went till the daily, and on the daily you can see we have that bearish W, that first leg, second leg, third leg, fourth leg already forming till the daily IC here. Very important to see, because between all the red candles you have one blue candle, which is very powerful, where the market normally take his power from. So I expect here some pattern decel, and then we can go to the downside. If I go to the 4 hour, then you can see the price is coming very impulsively. If I take my Fibonacci from the low here to the high, then we have a minus 60, 80 here from that point and a minus 27 here. So between these zones, we can have a pattern or diesel. So this was that trade. Then the next one is EURJPY. So on the weekly, what you can see on the weekly is we rejected from that institutional candle here where the power is from. We had that bigger bullish M for that potential bullish M to play out, and we had a fake out. So we had that bullish impulse, and then we had that fake out. We had a low, a high, a lower low, and then we had that bullish close till that low. So this is a fake out flag. So what I can see, we have a weekly bullish candle close. We've rejected from that weekly low from that institutional candle. Very nice. Bullish orders are coming in. When I went to the daily chart, what I can see on the daily is that bullish M pattern that can play out. So we have that first leg, second leg, third leg, fourth leg already forming till in our daily zone of interest. Very important as an trend line holding the price up. And maybe we can form the fifth leg to the daily minus 27 here, round number 2 to the downside. So I drew my daily zone of interest at the whole IC. So this is my whole box where I'm interested in. So I went to the 4-hour chart then, and I can see we already made here a bullish candle. So if we have a second one, then I can look for taking a limit. So like this, so we have the first, second will be the bullish, then the third one, and on the fifth one, I can take my limit till the daily minus 27 around, yeah, like this. 147.400, the round number to the downside. And then my stop loss for around 4.1%, 4%, like this. Like this will be a good one. So what I want to see is on the 4-hour, that first candle already, that second candle, the third candle will also be in that very nice deceleration box, and the fourth candle I will take my limit if the third candle closes in that decel box or having a wick at that point. So that's what I'm looking for. So that's what I want to see, like this, the first candle like this, and the fourth candle I will set my limit, and then we can go to the upside. Good. The next trade is GBPCAD. So on the weekly, what we can see on the weekly is after that very big impulsive move, we had the bearish candle close. So this can be an indication that the bears are kicking in after a long time of going up. We have a weekly bearish candle close, so it's a sign that the bears are coming in and are active. So I went to the daily chart, and on the daily I can already see a reversal pattern forming right now. We have that potential shoulder 1, head, shoulder 2, head and shoulders. So I want to have then the pullback going to that shoulder 1, and then I want to see a pattern on the 4-hour or diesel. So that's what I want to see on GBPCAD, and on the 4-hour, yeah, it's already making here a reversal pattern. So if I take my Fibonacci from the lower to the high, we have a minus 27 fib completion aligning with the daily zone. That shoulder 1 here, that head, shoulder 2, and from there we can go to the upside, and from here we can make a reversal pattern or diesel to take it to the downside. So that's what I can see right now on GBPCAD. So if I go to the next trade, CADCHF, so keep in mind I have a lot of same pairs, so I need to see what will be the best one to take. So yeah, so if I go to the weekly on CADCHF, you can see we are in a bearish trend. We have that weekly bearish W here, very big one. We are already making that weekly bearish candle close, so we can go more to the downside. So I went to the daily then, and on the daily what you can see is we have that bearish W, very big one. So this is actually a small bearish W because the first leg is very big, the second leg just normal, and the third leg is, yeah, the half of the first leg, even less than that. So the fourth leg I expect to come to that IC, because between all the red candles you have one blue candle. it works like a magnet, so it took a lot of power to take this as a blue candle close. That's why I expect the price to coming back to that IC. We have already a daily bullish candle close, so this can be a sign to go to the upside, that the bulls are winning the fight against the bears. So I went to the 4-hour chart, and what I can see on the 4-hour, we already broke this lower high, this was our lower low, we broke it, we can make a shoulder 1, head, shoulder 2 for possible more upside momentum. If I take my Fibonacci from here, the low to the high, yeah, it's not in the zone, but yeah, we can definitely go to that zone. So yeah, I want to see here a pattern in that zone at the IC. So then the next trade is NZDCAD. If I go to the weekly chart, you can see on NZDCAD, we have here a weekly supply and demand zone active at this selling zone wick. So what I can see is we had here some resistance, some support, resistance, support, support again, support, then here almost resistance, not yet the resistance. Then we have here resistance, support, resistance, and now we have resistance. So we had also that very big impulsive move after 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks of bullish candle closes. We have made the first weekly bearish candle close. So this can be a sign that after that very big impulsive move that the banks took out some profit at the supply and demand, and now we can go to the downside. So with that weekly bearish candle close, so I went to the daily, and on the daily we can make here our short. So if I zoom in more, you'll see it better. So we can make our reversal pattern in the form of a shoulder 1, head, shoulder 2. At the line chart, you will see it better, like this, shoulder 1, head, shoulder 2. Then we touched our daily highs, so that's why I took my daily zone at daily highs, because we touched it. So I went to the 4-hour chart, and we already are making here on the 4-hour chart 4-hour bearish candle close. So we touched our daily zone of interest, and we have our first candle, second candle, then the third candle touching, and then we can take the short after the third candle close at the D cell box, and then we can go to the downside. For the round number to the upside will be this one, 0.86050. Then the 4%, 33 stop loss, 33 pips will be a good stop loss for around 4%. Will be good. Then I'm looking to take here then the diesel. Then the next trade is AUDCAD. So I went to the weekly. And what is the weekly telling me right now? The weekly was after a very big impulsive move, after multiple weekly bullish candle closes. The first weekly bearish candle close, very impulsive. So this can be a sign. So I went to the daily. The daily can form then the shoulder 1 here, head, shoulder 2, reversal pattern. So I want to see the price coming back to that daily zone. So I will not go to the 4-hour because it's too far away from my daily zone of interest. So this needs to have some development to reach this daily zone of interest. Then the next one is silver euro. So if I go to the weekly, you can see we made a fib completion from the low here till the high, minus 27 fib completion, and you already see that the bears are kicking in from that point. So I expect more downside momentum after that weekly bearish candle close. So I went to the daily, and on the daily, what you can see is we have here that shoulder 1, this head, shoulder 2. We have a daily bullish candle close, so I expect the price to come back to that daily zone of interest. So on the 4-hour, I will see what we have there. We already broke this lower high, lower low. We broke it, so we can make the reversal pattern in the form of a shoulder 1, head, shoulder 2. So I will delete it, and I will take my Fibonacci from the low to the high. Yeah, it's kind of live into minus 60, 80 here, maybe. So we will need to see what will happen then. Yeah, we have the same on silver USD. Which one is the better one? I think, yeah, it's just the same. We have that weekly fib completion from the low to the high here. Minus 27 fib completion, weekly bearish candle close, daily head and shoulders. So it's actually the same thing doing. except, yeah, we have also a support in the head on euro, and here we have also some nice resistance support, supply and demand zone. So yeah, just the same pair. But the only thing silver euro need to have more is some more impulsive move to the upside, so it needs to have some more time to go to that shoulder one. Maybe this one is better because you need to do it like if you have a sprinter, it sprinted a marathon. The first 30 minutes it was very impulsive, and then yeah, he needs to take a break of 15 minutes, so it takes a break of 15 minutes, a good time to recover, and then you can push further and even more. So this is the difference between a small pullback when the sprinter has 5 minutes and a bigger pullback when the sprinter has 30 minutes to recover, when the impulse will be much bigger if he had a bigger pause. So that's what I can see on the pairs that I'm now seeing for the moment, which can make a possible trade this upcoming week. So yeah, have a nice weekend, everybody. If you have any questions, you can ask me. So yeah, see you next week. Bye.